Today you're about to discover the London Breakout Strategy and understand the European session a little bit better. We'll be discussing the foreign exchange or the Forex market, which is a 24-hour market. I'm going to be showing you some really fantastic trading opportunities and strategies which you can begin to potentially apply immediately, and if you follow the rules correctly, then the formula of success should begin to potentially generate income like it has done with thousands of investors before you. Before we get started, I do want to let you know that there is risk involved in trading the foreign exchange. So therefore, you should never look to invest money that you cannot afford to lose. Always keep equity management in mind. There's no such thing as 100% absolutes or guarantees or undefeated seasons. We ask that you go through an education in its entirety so you can begin trading as a knowledgeable and educated investor. Also, understand that I am not a CTA, which stands for Commodity Trading Advisor. So therefore, I cannot give you investment advice. I'm going to be able to provide you some very high winning percentage opportunities and very high winning percentage strategies, but at the end of the day, you have to make that decision. For those of you that do not know who we are MTI, which stands for Market Traders Institute, and we were founded by Jared Martinez in 1994. And we are located in Lake Mary, Florida, about 20 minutes away from Orlando, where Mickey Mouse lives. We operate under a single mission, which is to create successful Forex traders. Now, that building you see on your screen, that's where I'm located right now. That's where Market Traders Institute's headquarters are. In this building is also more than 100 of the most talented staff members in the industry, making us a very large institute, and as well as one of the world's largest education supporters. What I mean by that is this: we invest in our students tremendously. In 2014, the company spent over $2.4 million US, so over 89,440 man-hours supporting our students. Now, we've trained over 30,000 clients worldwide, and we provide lifetime education. And so, as you can imagine, we are supporting quite a few at one given time. Now, this year, in 2015, our projections is to invest over $3 million US, or just shy of 100,000 man-hours in supporting, educating, and teaching our students. Now, you may have already seen or heard of MTI on CNN, Fox Business, CNBC, or even Bloomberg Television, which are all major financial television networks. We were also voted the top 10 best places to work in Orlando business in 2014, and we're striving to get up in the top 5 this year. Today we're talking about the Forex market or the foreign exchange. And I understand that some of you may be brand new and some of you may be existing Forex members. And so what I ask is, go ahead and type in the question section box now. What type of investor are you? Are you an option trader? Are you a Forex trader? Are you brand new? Have you never invested before? Are you equities? Are you futures? What are you? Go ahead and type in the question section box your experience. Okay, so I see a handful of Forex, I see a handful of futures, I see a handful of investors. No brand new no investors, no investors to where you've never invested before, you're just kind of curious. Okay, that's pretty new. Julia says, hey, you know, I'm 10 years in the stock market. Okay, Jack says, hey, I'm 14 months with the Forex. Hey, Jack, very glad to see you in here, my friend. I recognize you, already MTI student. Well, today we're talking about the Forex market, and for those of you that do not know what it is, the Forex market is the world's largest financial market with almost limitless amounts of liquidity, which really means it is a market of limitless financial opportunity. The neat thing about the Forex market is it really allows you to focus. Unlike other markets, the Forex has around 60 currency pairs for you to trade from. But we're going to show you how you can just focus in on like the top 6 or the top 7, and this way you don't have to be all over the board. You can just stick to 6 or 7 currency pairs to look to invest in, which is really a huge leg up when it comes to investing, having that focus. Now we're going to be talking about PIPs, so you're going to hear that language, or PIP, which stands for price interest point. And what I want you to understand is what that is. I want you to be knowledgeable on it so you can begin to follow along. And so the question is, what is a pip and why is it important to you? Well, a pip is how we measure price movements inside of the foreign exchange. You know, in the stock market, how you see pennies worth of movement. Hey, the market went up 1 penny, 10 pennies, 25 cents, whatnot. Well, in the stock market, there are 100 pennies for every $1 US worth of movement. Well, inside the Forex market, there are 100 pips for every 1 penny worth of movement. So literally, as a Forex investor, you are trading fractions of pennies worth of movement. So I understand that you understand. Please be so kind. Type in a Y or yes in the question section box now if you understand and follow along that inside the Forex market, there are 100 pips worth of movement to equal 1 penny, just as there are 100 pennies to equal $1 US. Perfect. Now, the neat thing about the Forex market is you trade off leverage. Now, leverage is going to give you the ability to allow that pip to be worth much more than just a fraction of a penny. There's going to be 3 major lot sizes that you can choose from, or investment sizes. You have what's called a micro lot investment, where here in the United States, it's on average a $20 investment per trade. Will get you about 10 cents, give or take, per pip. So if the market goes your way 10 pips, you just made $1 US. If it goes against you 10 pips, you just lost $1 US. And then there's what's called a mini lot investment, or a $200 US investment per trade on average. That will get you about $1 a pip worth of movement. So if the market goes your way 10 pips, you just made $10. If it goes against you 10 pips, you just lost $10. Typically, newer investors or novice investors will start out anywhere between a micro position and a mini lot position. The reason why is, number one, the risk that's on the line is very manageable in regards to what you're willing to lose. And number two, if you make a mistake, make the mistakes with less money rather than putting a lot of money on the line when you begin to invest. Now, the neat thing about this is when you begin to grow your accounts and you begin to grow your experience and you feel as if you're ready to invest larger, there's what's called a standard lot investment. A standard lot investment is on average of a $2,000 US investment per trade. That means every pip is worth around $10 US. If the market goes your way 100 pips, you just made $1,000 US. Give you an idea, per currency pair, the market can move anywhere between 100 and even upwards of over 300 pips in a day. So that's about $1,000 to $3,000 US to be made every single day per currency pair, assuming you captured all the movement. But it also works against you. And so if the market goes against you 100 pips, you just lost $1,000. If it goes against you 300 pips, you just lost $3,000. So it's very important that you understand what you're doing before you begin to invest larger. We can't express that enough. Now, the neat thing about this is there's no limit on how much you can invest at one time. You can invest 50 standard lots, you can invest 100 standard lots, you can invest 1,000 standard lots. So whatever your risk whatever your risk tolerance is and how much money you have to invest with. Because there's over $5 trillion traded within a 24-hour period inside the Forex market. So it can definitely handle the liquidity. Now, we trade off of charts that are called Japanese candlesticks. And in front of you is an example of a chart that we're going to be looking at in just a few moments. These candlesticks represent price interest point over time. So they measure the price movement. We are looking, or we will be looking at today, 1-hour time frames, which means each of the candlesticks you see will represent 60 minutes. Now, how to read our charts is relatively straightforward. If you look at the upper left-hand side, where you begin to see that yellow arrow that points up, that's pointing to a currency crossover. That means we're trading against one country's currency versus another. And this one example is the Great British Pound traded against the US dollar. You have GBP first and then USD second. That means when the candles go up, the Great British Pound is gaining strength over the US dollar. When the candles go down, that means the Great British Pound is losing strength over the US dollar. Upward movement is measured as white candles. Downward movement is measured as dark blue or black candles. Now, for those of you that do not know who I am, my name is Jared Martinez. I am Market Traders Institute's Forex product expert. I'm also considered one of their Forex masterminds, and I'm going to explain to you why. I have trained thousands of Forex investors. I have turned an initial deposit investment of $500 US and generated over $39,000 US of profit from it inside the Forex market. I've made thousands of Forex investments myself. I am a published author, international speaker, professional analyst, and a full-time trader. Now, just like you, I was out there looking for information when I first got started. I was trying to inquire how to trade in the Forex market, how to get involved, what are the best techniques, what are the better techniques, what are the risk requirements, how much money do I need, when and where can I trade it. And so when I began to gather the information, I began investing. And June 5th, 2011 at 7:05 p.m. I opened up a trading account with $500 US. Please be so kind to type in a Y or yes in the question section box if you can see my account activity statement. Perfect. Well, when I first started, I started with $500 US. And when I first started trading, I was trading with a micro position, which means every investment was like $20, and I was making 10 cents per pip. So I wasn't really making a lot of money. I was only making like $7, $8 per trade, losing $3, $5 per trade. But I stuck with it. I saw the opportunity and what's possible, and I began to see the vision inside the Forex market. I began to compound, reinvest money that I made, and as well as when I had the opportunity, I put more money into my trading account. What that ended up doing, with the right education and the right plan of action to grow this trading account, within a year and a half, I started seeing very large, substantial returns. I started having trades where I made $4,560 US a trade, making $2,542 US a trade. Now here's the neat part. I was able to withdraw $10,000 US of profit at a time. Were there days where I lost? Of course. Losing is part of trading. Here's a day where I lost $779 US in one single day. But the larger the risk, the larger the reward. When you lose $779 in one day, and then the very next day you make $3,200, $3,490, and even have days where you make $7,598 US, you can begin to see that the reward outweighs the risk. And so therefore, this is a formula of success to grow a trading account. What's neat about my results is this. I have a 4,548.82% return on my initial deposit investment, which is third-party verified. The results have continued on to where now I have experienced days where we generate well over $8,800 US in a single morning, days where we generate over $10,000 US at a time. What I do here with MTI, Market Traders Institute, is I host what's called a live market Forex mentorship and empowerment program. It's basically a live trading club in which I trade live with our students here. And what we end up doing, and just kind of give you an idea, the last month, we only traded 2 times last month. There's 2 events, and we made $4,300 US with a standard position. And so what I want to do is I want to teach you the strategy that I was using last month to be able to generate this type of profit and that we utilize inside the club. But before I do, I just want to make sure that we're on the right track and on the right page. So does it seem appealing to you or worthy of your time to be able to learn an investment strategy that requires trading 2 times a month to have the potential or the opportunity to generate over $4,000 US? Imagine if you learned this and you traded more than just 2 times a month. If that's a yes, type in a Y or yes in the question section box. Well, perfect. We have a lively group today, and it looks as if the learning curve is relatively high. Okay, so let's go to the live market, and let me go ahead and show you how this works. In front of us is our wealth acceleration software. This is the charting software that we provide our students here at MTI. This allows us to read the sign language of the Forex market. And there's going to be 6 major currency pairs that we're going to be focusing in on, and we typically do not look anything outside of these 6 inside the club. And they are the following: Great British Pound against the US dollar, Great British Pound against the New Zealand dollar, Great British Pound against the JPY, Great British Pound against the Swiss franc. I do encourage you to write these down. These are going to be very important for you to follow along with if you plan on utilizing this strategy. Great British Pound against the Canadian dollar, and the Great British Pound against the Australian dollar. Notice how these are all 1 hour or 60-minute time frames, where every candlestick represents 60 minutes. So what I'm going to do is I'm going to open up these charts. I'm going to give everybody about 10 to 15 seconds just to write this down. You also may want to utilize this really handy picture. There's a little camera on the upper right-hand side. I'm trying to point to it with my mouse. Upper right-hand side, if your window is not fully expanded, you will be able to see it. If it's fully expanded, you may want to hit Escape. But that will take a snapshot of your screen. I do encourage you to have that. This is great information for you to follow along with. Okay, so let's go ahead and pull up the Great British Pound New Zealand dollar. And what I want to do is kindly draw out what's happening and then explain why it happens, and then I'll show you the actual strategy. But one of the things I do want to point out is the Forex market literally does the same things over and over and over and over again. When the market decides to go up, it's going to go up making higher highs and higher lows. You can begin to see that visually drawn by this orange line. And then when the market decides to fall down, it's going to make lower lows and lower highs, lower lows and lower highs. Just like any sort of visual cue or any visual view that you've ever seen related to any sort of market or progress or drawdown or whatever, it's a movement, it's wave movement. See, the market doesn't really do different things. It doesn't move in straight lines, it's not chaotic, it's actually a relatively structured place. And it creates patterns. What you have to do as an investor is you have to investigate and find those patterns. When you begin to find those patterns, it's what's called pattern recognition. You can begin to utilize a strategy or odds. What that basically means is, hey, look, the market has an X% chance of doing this based off of that. It's called the what if then approach. And so what I'm saying to you is I'm going to show you a strategy which allows you to recognize a pattern that has an extremely high winning percentage chance of repeating itself. And if you follow the rules to this pattern, you're not going to win 100% of your trades, but you're going to win a large majority of them. And because of equity management, it should put you into a position of success. Because success is a formula. Success is not a fantasy, and a formula has to be repeated. And because the Forex market does the same things and provides the same patterns over and over and over again, you have no choice but to follow a strategy and repeat your actions over and over and over and over again. What we end up finding is investors who end up failing in any investment world are the investors who do not create patterns. They're always out there chasing the latest and greatest. They're always changing their strategy, mixing it up, and they never give their formula an opportunity to actually succeed. So hopefully, if you're in that category, hopefully we can potentially show you something to get you out of there. So what I want to do is draw out what we're actually doing today. The Forex market literally does the same things over and over and over and over and over again. So much so that within a 24-hour period, the market will form a low of the day and a high of the day. literally every single day. A low of the day and a high day will form. You can visually see that very clearly on a 1 hour time frame. And because the Forex market is open 24 hours a day, from Sunday at 5 p.m. Eastern Time and then closes on Friday at 5 p.m. Eastern Time, there's going to be sessions. It's called the European session, the U.S. session, and the Asian session. It represents what parts of the world or the banks of the world are open and actively trading, and what type of, and where the sections of the world are where they're closed. Well, between 2 a.m. Eastern Time and 5 a.m. Eastern Time, the market historically will form the first high or low of the entire day between 2 a.m. and 5 a.m. Eastern Time. Then the market, historically speaking, will form the opposite high or low of the day, anywhere between 8 a.m. Eastern Time and like 2 p.m. Eastern Time. So right away, a takeaway from today's lesson is the first high or low is only about a 3-hour window from 2 a.m. to 5 a.m. You have about 3 hours to identify the breakout before it takes place. The opposite high or low is a much greater distance of time, and so therefore it's going to be a little bit more challenging. The neat thing about this is the distance between the low of the day and the high of the day, or vice versa. That can be anywhere between, on the very low end, 50 pips within a single day, and well over 300 pips in a single day, depending on what fundamental announcements are there driving the market. Now, as we discussed and talked about earlier, with a micro position, which is a $20 investment, every pip is worth 10 cents. So on the low end, that's $5 a day with a $20 investment. With a mini lot, which is a $200 investment on average, that's $50 of opportunity. And with a standard lot investment, which is just a $2,000 US investment per day, that's an extra $500 US a day opportunity. Okay, what I want to do is make sure you have this. If you know, regardless, if you don't move forward with continuing your education with us, that's not a problem. But if you do plan on trading the Forex market, I would encourage you to have this information, because this is extremely powerful. And so this way I know that the room kind of has this and we can move forward off this. Please be so kind. Type in "done" in the question section box. D-O-N-E. Some of you may see an arrow on your GoToWebinar software. You may have to click on that arrow to open up your box. And then just type in "done," D-O-N-E. What that will do is let us know that you've written this down, you've taken a camera, you took a picture of this, whatever, because this is great information. I wish someone told me this the first year I started trading, because this makes a very, very clear picture of how to approach the market. I'll give everyone about 10 more seconds. Thank you, Hector. Thank you, Gloria, Bruce, Vernon, Patrick, Vin, B, John, and everyone else. Okay. Once again, it looks as if this presentation is being recorded, so it looks as if there may be an opportunity for you to review this at a later date as well. Okay, so what I want to do now is I want to prove to you that what I just said is truth. And how I'm going to do that is literally we're just going to go day by day. I'm going to show you from 2 a.m. Eastern Time to 5 a.m. Eastern Time how the market can form a high or low. How am I going to do that? Well, I'm just going to right-click over a candlestick. Okay, and no better way to start than today, which is March 4th, 2015. When I right-click over the candlestick, this pops up my box information. Now, this box information provides me the date. It shows March 4th, 2015. The highlighted candlestick open, not the close time, but the open time of the candlestick. So this shows 2 a.m. The open price, the high price, the low price, the close price, etc. And so what I want to talk about and notate, even this morning alone, at 2 a.m., the market formed the high of the entire day. Now, why is that important? We'll take a look. On the upper left-hand side, you can begin to see when I measure for pips to kind of see distance, upper left-hand side where it says range, it shows 229 pips worth of movement. Well, 229 pips, by all means, that's with a standard position well over 2,000 US dollars. So I'm going to show you how to take advantage of that in just a few moments. But be that as it may, let's take a look at the previous day. And we're just going to go back maybe 15, 20 days or something to kind of show you the consistency of this. Look here at 3 a.m. The market is associated with a high. The market makes a directional drop towards the south. We'll take a look at the previous day, which is the second. Look here at 2 a.m. Market forms the high of the day and then begins to fall bearish. Let's take a look at the previous day. Now, usually when I go through this, this begins to open up a lot of investors' eyes, and they begin to feel a little bit more comfortable that what I'm teaching them and showing them is truth. February 26, 2015, 2 a.m. We were not associated with the high of the day, which is fine. But like I said, it's not 100%. But at 2 a.m., look how the market made a directional drop, a big old large movement, and that's more important than anything else to get that volatility movement. Let's go ahead and take a look at the previous day. Look here at 4 a.m. We formed the high of the entire day and fell down bearish. Let's keep going. And literally we're just going to go day by day and just kind of build consistency of how this works. The previous day, which is the 23rd at 4 a.m., we formed the high, and this time it's just of the morning, and then the market makes a directional drop. The previous day at 4 a.m. on the 20th, we formed the low of the morning, and look how the market rallies. And so as I'm going through this and marking these down and highlighting the highs and lows that form between 2 a.m. and 5 a.m., how many of you are looking at this and you're saying to yourself, hey, this is actually pretty cool. This is pretty neat. You know, this is actually a pattern that shows strong consistency. If that's you, just type in a me or something of the notation that notifies or says, hey, I see this and I'm beginning to believe it. Here is the previous day, which is 5 a.m. We formed the low of the morning, begins to rally. Previous day at 2 a.m. we're associated with the low, not the low, associated and the rally towards the north. And so let's give like a good solid 30 days or something. February 10th, 2 a.m., low of the morning, begins to rally. Previous day, (2 a.m., low of the morning, begins to rally. Previous day, 2 a.m., low of the day, begins to rally. It's just the neatest thing to me to see this. 2 a.m., low of the day, begins to rally. Previous day, 3 a.m. high. Okay, so I think I began to prove the point. A good solid month. Consistently highs and lows forming between 2 a.m. and 5 a.m. I would comfortably be able to say, 70+% of the time we've had a high or low actually form between that 3-hour gap, 3-hour window. So what this does now, this gives you a huge, huge, huge competitive edge. Not only that, but you can also time your trade. You can kind of begin to plan your day out and begin to plan your trading opportunities. You don't have to turn to your charts and say, where am I going to look? And I hope it forms, or the opportunity forms soon. Instead, you're going to be able to turn on your charts and say, hey, I have about a 2 to 3 hour window here to generate this, or identify the high or low. Okay, so 2 things I'm going to do. Number 1, why does this happen? I'm going to answer that question. Then number 2, how do you take advantage of that? I'll answer that as well. So the reason why this happens so darn consistently is because the Forex market is open 24 hours a day. Sunday opens at 5 p.m. Eastern Time, and it remains open 24 hours a day all the way until Sunday where it closes at Friday, where it closes at 5 p.m. Eastern Time. And like I talked about earlier, there's 3 major trading sessions. You have the European session, the U.S. session, the Asian session, and that signifies, those sessions signifies opening and closing those sections of the world of where they're going to be trading or who's trading and so on and so forth. And at 2 a.m. Eastern Time is when the European session begins to open up. Now, because of how large Europe is, and because of the different time zones over there, it takes up towards like 3 hours for the entire session begin processing orders. And I'm more focusing in on not people like you or me, not the retail investors. I'm talking about the bank investors. I'm talking about those big billion-dollar money managers, those fund management investors, right? Where the money's at. And so when the banks begin to open up, they have transactions that they have to place. See, they have huge exchanges throughout the night that come in that they have to process. And what I mean by that is this. Here in the United States, I live in the United States, and let's say I own a company. And let's just say that my company, I need to go purchase and I need to go buy new material, whether it's electronics or cars or whatever. But because of business, because I'm a businessman, I'm looking for low overhead. I'm looking for a product that's relatively cheap. And so I'm not going to be buying my product, which I sell in the United States, from the United States. I'm going to go overseas. Let's just say from Japan, okay, or China, or whatever. Well, what has to take place is I can't just go pay in U.S. dollars. I have to exchange it. Let's just say I have a $1 billion order. Well, I have to take $1 billion US and exchange that into another country's currency. Well, by all means, I can't just go to my local bank and say, hey, give me $1 billion of this. What ends up happening is my orders begin to get pushed off until majority of all bulk transactions like that end up in Europe. And so what ends up happening is when Europe opens up at 2 a.m., the banks have all these orders that came in that they have to begin to process. And when they begin to process those orders, it causes a directional move, either up or down. And that's why we have such an extreme high winning percentage chance of forming a higher low between 2 a.m. and 5 a.m. Just so I know you're on the same page, please be so kind to type in a Y or yes in the question section box if it logically makes sense that the reason why the market forms a higher low today is because the banks are beginning to process orders in the first 3 hours of the session when it opens up, which causes a directional push or breakout. Perfect. And the reason why I wanted to go into detail is because I know that some of you are probably involved with like trading clubs, or you have a trading buddy or your friend. I'm sure you talk to someone about investing. Some of you may not, but I'm sure some of you do. And so if you ever want to try to explain why this happens, now you can. So now I want to talk about how in the world do you take advantage of this? Well, there's really two ways to take advantage of it. There's the breakout way, which is just a random breakout, and then there's a predicting the breakout. Let me show you the random breakout way. Kind of get your feet wet. You're going to be able to apply this tonight or today if you want to after you learn this. For those of you that have open trading accounts, anyways. And then we'll talk about the advanced way. So everything that we do, this whole strategy is based and surrounded around the 3 a.m. Eastern Time closed 1 hour candlestick. Now remember, our charts measure the open time. Okay, so when I say 3 a.m., I'm talking about the candlestick that opens at 3 a.m. and measures 60 minutes, so it closes at 4 a.m. So really, you're going to be doing everything. You're going to be placing all your trades and all your orders at 4 a.m. Eastern Time but we're going to be working off the closed 3 a.m. candlestick. Once the candlestick closes, you're going to place what's called an entry buy order, 10 pips above the high of the 3 a.m. closed candlestick. So 34.44. Entry buy plus 10 pips above the high. Then you're going to place what's called an entry sell order, 5 pips below the low, 32.27. Entry sell order, 5 pips below the low. Every candlestick represents 1 hour of trading. Now, an entry buy order and an entry sell order, they're not active orders. What I mean by that is you're not physically buying or selling anything. They're pending orders. You're making it a requirement that the market actually touches this price point before it triggers you in selling or triggers you in buying. You will predetermine your lot size prior to entering into the market. So therefore, for today's example, I'm going to be utilizing a standard lot, which means every pip is worth $10 on average. So if the market goes against me, how many pips I lose, I'm going to times that by 10, and that's my loss. Every pip that I make, I'm going to times that by 10, and that's how many US dollars I won. So let's see what happens. Within 1 hour, the market touches my entry sell. Now, what ends up happening is this entry sell becomes a market sell. I am now physically selling this market. The very first thing that I need to do is I have to cancel the opposite order. I have to get rid of it. I cannot have that floating. I do not want that order out there. There's no need for that order to be there. The reason why is the market has a 70+% chance of forming a higher low right now. And what we've said is based upon the prediction of the movement, I'm expecting the market to fall bearish. So there's no need for the market to go up. Instead, if the market does go up, I'm going to place a stop 5 pips above the high. Stop plus 5 pips above. Now, a stop, for those of you that do not know, is an automatic exit for loss. What this basically means, and what this is saying, is if by chance we are wrong, we are going to take a loss, or we're going to exit our trade with a losing position at this price point. You really cannot predict or control how much money you're going to make. But what you can control 100% of the time is how much you're willing to lose per trade. And that is extremely important to your success or failure as an investor. Now, let's talk about reward. Reward, no matter what, will always be at least 50 pips. But if your risk is over 50 pips, then whatever that risk is, you're going to match that to your reward. So it'll be 1-to-1. You're going to have days where your risk is only 25 pips, 20 pips. Those are the days where you're going to have rewards of 50 pips. If you have a larger risk, like in this scenario, our risk involved in this trade is 112 pips. So if we lose with a standard position 1,120 US dollars. But now we're going after 112 pips. 2.0716. 2.0716. 112 pips, which is equal to 1,120 US dollars. Okay, so every candlestick represents 1 hour of trading. Let's see what happens. 1, 2, 3, 4. After 4 hours being in the trade, we're now profitable. 5, 6. After 6 hours in the trade, we just hit 112 pips, which means we just made 1,120 US dollars. So here's my question to you on deciding whether or not that this is something that interests you. Would you like the idea within 6 hours of being in a trade of making 112 pips or 1,120 US dollars? Yes or no? If the answer is yes, really pay attention to the next examples because I'm going to keep going. I'm going to show you how you can continue this on. If the answer is no, then by all means you can kind of tune me out until the next presenter comes on. Okay, the neat thing about this is 1 day, 1 trade per currency. Now we're going to move on to the very next day. Did the market keep falling? Absolutely. Could you have made more profit? 100%? Absolutely. But that requires more education. You have to understand the characteristics and technicals of the market before you can really reap the rewards of home runs. What I'm teaching you is something that will bring you to first base, because if you can get to first base, you still make it to the big leagues. So now it's 3 a.m. Eastern Time. 1 hour candlestick has closed. I'm going to place what's called an entry buy order 10 pips above the high. Excuse me. High is 58, 28. You may want to write this down. Entry buy plus 10 pips above high. Then you're going to place an entry sell 5 pips below the low. 21, 16. Entry sell 5 pips below low. Every candlestick represents 1 hour of trading. Let's see how long it takes for us to be taken in, either buying or selling. 1. And this is pretty normal. Within 1 hour, the market has triggered your trade. The entry buy now turns into a market buy. The very first thing that I want to do is cancel the opposite order. I want to get rid of that order. There's no need to have a sell going on or entry sell. I'm looking to buy this market because the breakout went bullish with a 70+% chance that the market's going to form a higher low during this time. Use that to your advantage. What I am going to do is protect myself by placing a stop at the low. For those of you who are active traders, the reason why you place your stop at the low when buying and 5 pips above the high when selling, because you're just trying to compensate for the spread. These are bid charts, which means you're looking at the sell prices. You don't see the buy ask price. For those of you that have no idea what I'm talking about, don't worry about it. Once you begin trading, you're going to know exactly what the spread is. It's just how your broker gets paid for you placing trades and how we work around it inside the investment world. Just understand that when buying stops at the low, when selling stops 5 pips above the high. The risk involved in this trade is 106 pips, so the reward is 106 pips, 2.0633. Reward is 106 pips. Every candlestick represents 1 hour trading. Let's see what happens. 1, 2, 3, 4. Within 4 hours, we hit our reward. So within 4 hours, we just made, with the standard position, 1,060 US dollars. So the first day we made $1,120. The second day we made 1,060 US dollars. Done. No need to be in front of the computer. No need to wait for another trading opportunity. You just have until the next day. So did the market keep going up? Sure. Could you have made more money? Absolutely. But that would require more education and for you to educate yourself above and beyond this. So here we are. The very next day, 3 a.m., we're going to be looking to either buy or sell. What I would like to do is kind of recruit you to teach me. Because one of the things that we've learned here at Market Traders Institute is you can't really own something until you can teach it to someone else. If you can't teach it to someone else to where it can make sense for them to learn, then the big question is, do you even truly understand it? And so why don't you tell me, how many pips above my 3 a.m. 1 hour closed candlestick is my entry buy? Perfect. If you typed in 10 pips, you're absolutely 100% correct. If you did not know that answer, I do encourage you to write it down. Entry buy is plus 10 pips above high. Now we have what's called an entry sell. You tell me, how many pips below my 3 o'clock 1 hour candlestick am I going to place what's called the entry sell? If you said 5 pips below the low, you're absolutely 100% correct. If you did not know that answer, you may want to write it down. Now remember, an entry sell order and an entry buy order, they are not active orders. You're not actively involved in the trade as of yet. They are pending orders, which means you're waiting for the market to either touch buying or selling to enter you into the trade. Let's see what happens. Within 1 hour, the market hits the entry buy, which means this now becomes a market buy. We're now physically buying this market. Okay, what's the first thing that I want to do? Think about it. I'm buying the market. I'm in the trade long. What do I want to do? If you said cancel the opposite order, you're on fire. There's no need to have that entry sell order out there because we've taken the position of only looking to buy. What we will place is a stop to protect ourselves in case of a loss. When buying, where do you place your stop? Stops at the what? Stop is at the low. Hector, Theo, Miss, Vernon, Patrick, Eric, everyone else, perfect. Stop at the low. The risk involved in this trade is 72 pips. What is my reward? This is the last question, and if you answered all of them correctly, then absolutely you can do this. 72 pips away. 2.0713. Reward, 72 pips. What this means is if I lose 72 pips. Sometimes that happens. But if I win, I'm going to make 72 pips. That's what we're looking for. So every candlestick represents 1 hour trading. Let's see what happens. 1, 2, 3, 4. Within 4 hours, we made 72 pips. Not too bad. In 4 hours with the standard position, we made 720 US dollars. Okay, how many of you would enjoy the idea of making 720 US dollars or 72 pips within 4 hours? What if you did this for 3 days and you made $1,120 first day, $1,060 second day, $720 the third day? What would you do with that extra money? Kind of neat things to think about. Okay, let's keep going. Could you have made more money or more profit than what you did? Sure. But you have to educate yourself on how to do so. We're going to do a few more examples, and they'll bring us to the live market, and I'll show you what happened this morning. This is February 6th, 3 o'clock candlestick close. We have an entry buy. 10 pips above the high, 58, 68. Then you have an entry sell, 5 pips below the low, 27, 22. $10 pips above the high, entry sell is 5 pips below the low. Every candlestick represents 1 hour trading. Let's see what takes place. 1, 2. Within 2 hours, the market hits the entry buy, which now the entry buy is activated and we have a market buy. The very first thing that I want to do is cancel the opposite order. I will then place my stop at the low of my 3 o'clock candlestick. Stop at the low. If my risk is 40 pips, this is a trick question. Let's see who can get this right. If my risk is 40 pips, what is my reward? Let's see who got it right. If my risk is 40 pips, what is my reward? If you said 50 pips, you're absolutely 100% correct. Now remember, your reward will always be at least 50 pips, no matter what. Some days, especially during the summer months, you will have risks of only 20 pips, requirements of only 25 pips to risk. But your reward will always be at least 50 pips. Why? 50 pips is first base. The market has an extremely high winning percentage chance of going at least 50 pips in your direction. Okay, every candlestick represents 1 hour trading. Let's see what happens. 1. Within 1 hour, the market hits the reward, which means within 1 hour of being taken in, we made $500 US with a standard position. 1 day, 1 trade per currency. Could you have generated more? Maybe, but it would require more education. Okay, let's move on to the next day. All right, 3 o'clock candlestick has closed. I'm going to place an entry buy order, 10 pips above the high. I'm going to place an entry sell order, 5 pips below the low. Entry buy, 10 pips above the high. Entry sell, 5 pips below the low. Now, one of the things I want to point out here to everybody is this. I'm not doing different things. I'm not changing my game plan. I'm not changing the formula. I'm not messing with it. I'm literally doing the same thing day in and day out. And that's how your strategy and that's how your plan realistically needs to be. If you find yourself doing different things constantly, that is pretty chaotic and it's pretty sporadic strategy. And if you're sporadically changing things up and it's inconsistent, you probably also are experiencing inconsistent results. But what you end up finding is the moment you become consistent with your strategies, the moment your results become consistent. It's pretty crazy how that works, but it just is what it is. Okay, let's keep going. Within 1 hour, the market takes us in selling. Entry sell becomes a market sell. Then we have we're going to remove the previous order, and then we're going to place a stop 5 pips above that high. 81, 86. Stop, plus 5 pips above high. We measure out the risk. 106 pips worth of risk. Reward would be 106 pips. 0.473. Reward, 104 pips. Let's see what takes place. Every candlestick represents 1 hour of trading. 1, 2, 3, 4, 5, 6. 6 hours later, we hit our reward. Within 6 hours of in your trade, you made 1,040 US dollars. Okay, question. Yes or no? You tell me. Are we doing the same thing day in and day out? Yes or no? Are we following the same process day in and day out? Yes or no? Are we being consistent with our strategy? Yes or no? Now, are our results consistent thus far? Yes or no? Perfect. The reason why this works so well is because the market, 10 pips above high, the market does the same things over and over and over again. Entry sell, 5 pips below the low. And because the market does the same things over and over and over again, if you want to be successful, you have to be intentional about doing the same things over and over and over again. Within 1 hour, you're taking in, your entry buy has been hit. Your entry buy turns into a market buy. We're following the same process. Once your entry buy is turned into a market buy, you cancel the opposite order. Same exact process. Then we're going to place our stop at the low of your 3 a.m. buy. Same exact process. Stop at the low. Everything is exactly the same. Will this win 100% of the time? Absolutely not. Is it guaranteed success? Absolutely not. Does it win more? On most occasions, yes. Will it put you into profit? On most occasions, yes. Is this a successful formula? Yes, it is. 46 pips risk, 50 pip reward, 0.597. 0.597 plus 50 pips reward. Okay, does it logically make sense of how we've been able to successfully generate consistent results inside the trading club by utilizing this strategy? Here we go. 1, within 1 hour, we make 50 pips. Within 1 hour, we made 500 US dollars with the standard position. Okay. How many of you think you can do this? Let's do another example. Yeah, typically what we end up finding is this strategy is relatively straightforward, and our investors love it, and they end up teaching like their wives, their husband, their significant other how to use this strategy. Some of them even go as far as teaching their kids, and we think that's actually quite neat because it gives them something to do. It actually gives them the ability to bring their family members involved. Because let's be real with one another, trading can be a lonely game if you have no one to talk with. Entry buys, 10 pips above high. Entry sell, 5 pips below the low. Every candlestick represents 1 hour of trading. Let's see what happens. 1, 2. Within 2 hours, your entry buy is turned into a market buy. First thing we do is eliminate the opposite order. Then we place our stop at the low. excuse me, stop at the low. We measure out our risk. If our risk is 60 pips, our reward would be 60 pips. 0.677. And in this scenario, the candlestick that took us in is also the same candlestick that gave us the reward. So therefore, in less than 1 hour, we made 60 pips, where the standard position is $600 US. Okay, I'm running out of time here, and I'm getting a couple questions regarding the club. Let's go ahead and do this. Costas and Dan, I know you're asking about the club and the details of it. Let me add up all these trades. Let me add up all the results, and then I'll give you the details of the club. And if you want to get involved, I'll show you. Okay, so we had 1, 2, 3, 4, 5, 6, 7 trades. We could keep going all day, but we're just running out of time. We had 112 pips plus 106 pips plus 72 pips plus 50 pips, 104 pips plus 50 plus 60 equals 554 pips. 554 pips is equivalent to $5,540 US with a standard position, 7 days. So here's my question. Ladies and gentlemen, for those of you in this room who watched how this works, do you believe the types of returns that you're seeing are matching up with the types of returns that you're searching for? Would an extra $5,540 US this month do a whole lot of good for your investments? Yes or no? So what I want to do now is I want to go over the details of the program, but I want to make sure that everyone's on the same page. So is it okay, everyone, that I go over the details of the program, kind of show you what you can do to come, because we trade this live inside the actual trading club of the LMFS, the Live Market Forex Mentorship and Empowerment Program, and many others. We also have a New York session, which is a U.S. session during normal times or waking hours here in the U.S., which is just as simple and straightforward as this. Okay, so what I want you to do is I want you to take a look at your screen. The club itself typically is $297 US a month. You're not going to be paying $297 US to get involved in this club, and I'm going to go over the details for you in just a moment. But if you get involved today, in the next 60 minutes, what we'll do is we'll give you the opportunity to get involved for just $27 US for your first 30 days to try it out. We'll give you a 30-day, 100% risk-free opportunity, which means you get all your money back if you don't like it. But if you want to continue on with this club, you won't be paying $297 a month. You'll just be paying $147 a month thereafter. And so what I want you to do is take a look at your chat box. Type in a Y or yes in the question section box if you see this link. That link will bring you to this page. So if everyone could please be so kind just to click on this link right now. I'm putting inside the question section box, and just type in yes when you have this page. Okay, perfect. So what this link does is it goes over all the details of the program. I only have 12 minutes to go through all the details. I'm going to show you stats, and I'm going to show you performance results, because performance does matter. But let me just go ahead and read everything out here for you. It says the Live Market Trading Forex Mentorship and Empowerment Club. Learn how to trade with knowledge and confidence from the world's leading Forex masterminds. Here's what you get when you sign up today. You get a Forex trading mentorship from Market Traders Institute's team of leading experts, so it's not just me, you get another individual as well. Weekly sessions to watch as our skilled traders perform live trades, or live Forex trades. Weekly Forex market analysis and review. 30 days of free access to our VIP Analyst on Demand service. You're going to want that. I'll go into details in just a few moments. Unlimited access to historical sessions and market analysis. That's priceless in my opinion. Unlimited access to Forex Tips online community of worldwide traders. You get to connect with other investors. Introduction to currency trading. 4 Forex lessons by marketers. That's really special, especially if you know nothing about the Forex market. Just the Forex lessons by itself is going to be a huge leg up and giving you a competitive edge. 10 Keys to Successful Forex Trading by Jared Martinez ebook. 101 profit plan consultation call with a Forex education specialist. So this is a total value of $5,400 US. And for those of you who know about Marketers Institute, you kind of understand the quality in which we provide. We're definitely not the cheapest, but we definitely provide, in our opinion, the highest quality. Now, what we're going to be doing for everyone today is, because we put this into a club membership, and kind of say thank you to Winvesting for giving us an opportunity to speak today, you're going to see a timer. It's going to give you 60 minutes. I clicked on this a little bit before we started, but it will give you 60 minutes to sign up for 30 days. It's only $27 US. How this works is actually relatively straightforward and simple. You have your subtotal, which is $27 US. You need to just enter in your first name, your last name, your address line, city, state, zip code. If you live outside the United States, like United Kingdom, your state will not be required. Phone number, email address. Then all you do is you enter in either American Express, Discover, MasterCard, or Visa. Type in your credit card number, expiration date, place order. You're done. You will then automatically be joining the club. You'll be receiving email invitations, as well as you get direct access to the online education portal. Now, once again, go ahead and click on this link inside the question section box now, and what that will do is bring you to the sign-up page, and where you can click on Take a 30-Day Test Drive. It's literally for everything you're getting. For $27 US, it's a really, really great deal. But we also want to make sure it's a zero-risk opportunity for you. What I mean by that is, if you don't enjoy the club within 30 days, let us know. You get all your money back. So there's zero risk and there's everything to gain with this. Now, if you're anything like me, you're going to want to know the performance of the club, because what if you only participate in the trading sessions? What if you don't really care about us planning your trades, giving you a trading plan for the entire week, or you don't really care about follow-ups or so on and so forth? You just say, hey, listen, I just want the trading opportunities. Okay? Well, performance matters. Last year alone, from May to December, we generated, just trading 2 times a month, that's it, 978 pips. That's $9,780 US. So here's my question to you. If all this package did for you, if all this program did for you, was allow you to get involved for just $27 US for the first 30 days, and then you gained a skill, a life skill, to where you made just shy of $10,000 in 8 months, would it be worth a $27 investment? Yes or no? If you answered yes, then by all means, I encourage you to click on that link and enroll. What I want you to do is imagine having the opportunity to experience live webinars where you're learning from an experienced trader who has days like this. Here are stats from a very similar session where we made 964 pips from trades placed on that day, and then we took a big profit just 11 days later. I know I only have 5 minutes left. Let me give you some more historical information. Here's Thomas S. on the upper right-hand side. He joined MTI, and he made $4,500 US his first week. Bottom left-hand side is Anthony S. He's an MTI student as well. He's making on average 3,000 pips a month. Here are your Forex masterminds. I'm on the left-hand side. I'm one of the instructors. I host the European session. We have days where we make well over $8,800 US. That's my experience I bring to the table. I trade larger lot sizes. I have a tremendous amount of experience, and I know how to generate and get students to generate results. Right-hand side is Chris Pulver. He hosts more of the U.S. session. So if you can't attend my session, not a problem. I'm going to show you how to enter into the market today and exit today and potentially generate profits. Chris Pulver, he's going to teach you how to enter into the market during the U.S. session, and your trades are going to last anywhere between 1 day and 5 days. So it's actually a really nice mixture. He is a private money manager, manages hundreds of thousands of U.S. dollars at a time, and he has a gain of 60.56%, third-party verified within a 12-month period, which is monster gain for money management. Total, you get 8 live market online Forex sessions per month. That's what you're getting for this 27 US dollar investment for the first 30 days. Inside the 8 live sessions, you're going to learn directly from us, well-known Forex investors, and how you can potentially mimic our Forex success. You'll understand how to avoid making costly mistakes, learn how past history repeats future profit potential, discover ROI-boosting strategies to accelerate your trading account, and you're going to be able to pick our brains in live Q&A sessions. We only have 4 minutes left, so let me get through a couple more of these. Every Monday at 10 a.m., from 10 a.m. to 11 a.m., what we do is we will provide you, myself or Chris Pulver, will provide you the highest winning percentage trading opportunities of the week. So we host a 1-hour live presentation, which is recorded. You can also watch the recording if you're unable to attend the live presentation. But in that 1 hour, what we do, sometimes it's 30 minutes, sometimes it's only 10 minutes, just depends on how much opportunity is out there. But we will provide you the currency pairs that we want to trade for the week, the stops, the limits, the entries, the strategies, and explain whys. We'll also answer any questions that you may have during that time, kind of help plan out the week. All presentations are recorded, plus ongoing access. So you have information all the way from May of last year, so you have literally hours upon hours upon hours upon hours of recorded content that we encourage you to go through. We do provide you a 30-day money-back satisfaction guarantee, making this a zero-risk opportunity. We don't want any bad blood over a $27 investment. Once again, this is normally $297 a month, but today, for the first 30 days, you can have a trial run for just $27. If you decide to continue on after the 30 days, we'll give you a guaranteed 50% savings. So it's just $147 a month after. If for whatever reason you say, hey, you know what, you're a fast learner, after 30 days you go, hey, this is great, I don't need to continue on, cancel anytime, no obligation whatsoever. Okay, everyone, once again, I'm going to go ahead and post in the question section box now the link. If you can kind of just give me an idea, because I'm going to pass the presentation back over to Dan, but kind of give me an idea. If you plan on signing up or kind of testing this out or inquiring more information about it, can you do me a favor and just type in the question section box, sign up, SIGNUP. What that will do is kind of give me more of a visual view from all the students in the room who plan on joining the club, so I can have some sort of expectation of when the next, how many new individuals we'll have for the next session. Thank you so much, Jim, for typing in sign up. Thank you, Carol. Thank you, John. Thank you, MAN. I do appreciate that, my friend. Thank you, Theo, for the trust. Thank you, Garrett. Thank you, Donald. I do appreciate that as well, and everybody else. Once again, everyone, thank you, Amanda, Ahmed, Eric, and everyone else for giving us the opportunity to serve you. We're dedicated to surpass your expectations. We're here to assist you. We're here to help. We bring a tremendous experience to the table, and I want to be the first one to say thank you for giving us the opportunity. Once again, thank you, Daniel, and letting us be a part of MarketFest, and thank you, Winvesting, for giving us the opportunity to be the Forex authority for today. But on that note, every day, helping traders find a way. This is Joshua Martinez, out.